So next one, Andy and Company, a reputed CA firm, is appointed as an auditor of Manav Swarupam Limited. The company is into the manufacturing of copper products. The company has advanced in all its endeavors by supplying million copper units. The company has incorporated another company, Daiva Swarupam Private Limited, by investing 45% in the share capital of the company and at the same time having 100% control over the board of directors as per the agreement with the majority shareholder. The company is listed on the US stock exchange, but in the process of listing in the Indian stock and is in the process of listing on the Indian stock exchange, having a net worth of 245 crore. The product is promoted by Alibaba as its product brand ambassador. You are the audit manager in charge of the audit team this year, and your first year trainee asks you the following questions listed down. He has also noted down some of the questions for you want to you to answer to discuss the impact on the planning stage after understanding the entity and its environment. Company is required to appoint the internal auditor. I think they love this internal audit section 138 and SA 610, and the company complied with the same by delegating the duties to an employee who joined the company as first year architect. Oh my God. Audit team is planning to use the work performed by the internal audit function as the reports given by him are designed in a marvelous fashion, because obviously he's an architect, no? So he designed the reports in a marvelous fashion. Even the board of directors are astonished by the design of the internal audit report. The company is planning to use the working papers of the previous auditor by demanding the audit working papers from him, citing the confidentiality clause. The auditor also plans to use the same for testing the opening balances during the year. Previous auditor having been appointed as the auditor of subsidiary, the company plans to use his work for verifying the investment balance during the year. On the basis of the above, answer the question. Engagement partner has requested you to comment upon the usage of the work of the internal auditor by the engagement team in accordance with the relevant standard on auditing. As the work done by the internal auditor is marvelously designed and presented, same can be considered to the extent the statutory auditor can use it. As the work is highly appreciated even by the board of directors, the same should definitely be used by Andy and Company. The work done by the internal auditor needs to be assessed for the sufficiency and should be used to avoid the double work. The audit team of Andy and Company need to reduce the unnecessary work as the same has been performed by the other auditor. The auditor is required to assess the competence and the professional care of the work performed by the internal auditor. Thus, the auditor Andy and Company needs to reconsider the audit strategy and cannot use the work of internal auditor. Work performed by internal auditor can be used by the external auditor. In this case, if the architect is not an employee of the company but is in private practice, they just had to make some point. Right, so what does it say? He has to consider the competence, the professional care taken by the internal auditor. And here, the internal auditor is an architect, and that too first year architect. Right, so we need to reconsider the audit strategy and cannot use the work of the internal auditor. Trainee asked whether the audit team is to perform any procedures over the investment in Daiva Swarupam Private Limited. Company needs to prepare the console and the same needs to be audited by the auditor, and the auditor needs to consider the financial information and also assess regarding the need to use the work of other auditor. Right, the auditor needs to perform the audit procedures over the balance in investment and the transactions with its related parties. Auditor need not perform any procedure as the investment was made in the previous year, both A and B. Obviously, it is both A and B. Trainee asked about role of auditor in case the investment in Daiva Swarupam Private Limited is increased to 60% in the next year. The auditor need not do any additional procedure compared to this except for the audit procedure over the increase in the investment value and its disclosure. Auditor should also audit the group consolidated financial statements if the consolidation becomes applicable for the company, being the investment raised from 45 to 60. No, they already had 45% of the equity stake and also the stake on the decision making of the organization, right? You see it over here. Equity stake 45% and 100% control over the board of directors. So it was already their subsidiary, not that it's becoming their subsidiary in the current year. Auditor needs to audit the subsidiary books of account to get comfort over the balances of the material subsidiary. Thus, the audit strategy will change for verifying the investment. The auditor can either on its own or audit the subsidiary, or they use the work of another auditor to get the comfort over the balances in the subsidiary from the next year. No, it is already your subsidiary. You only have to check the increase in the investment value and the disclosure. Okay. Company has requested its previous auditor to give back its audit documentation working papers and warned the previous auditor with legal notice to submit them back to the company, showing the confidentiality clause. Okay. Previous auditor is bound to return the working papers as the company has raised the confidentiality clause. This 230 is not applicable in such a scenario as the original owner itself is requesting to return the working paper. No. Auditor has a right over its working paper and he is the owner of the work paper, but he cannot give the work paper to any person even at the request of the company. No, we say no, at his discretion. Auditor has a right over his working paper. He is the owner of the working paper. He may at his discretion make working papers available to the company. Auditor has a right over its working papers, but the owner of them is the company. Oh my God, no. Okay. Right, now trainee asked you whether Ind AS is applicable to the group or not. Yes, so it says yes, but only Manav Swarupam Limited needs to prepare the financial statements as per Ind AS. Yes, the company Manav Swarupam and its subsidiaries needs to prepare financial statements as per Ind AS. Only then line by line addition is possible. Right, the company is not required to prepare financial statements as per the Ind AS rules, as the net worth of the company is below 250 crore and it is not listed in any recognized stock exchange in India. The company is required to prepare its books of account as per US GAAP, as it is listed on the US stock exchange. Get the books of accounts audited by CPA but not the Indian CA. Oh my God. Right, so what does it say? The company has to, right, the company Manav Swarupam and its subsidiary prepare financial statements as per the Ind AS. Okay, I think this was an easy one. Okay.